Well, the energy space is wrapping up a brutal week. The S&P energy sector clocking in its worst week of the year. In fact, this as crude oil tumbles. So the commodity is on track for the worst first half of the year since the late 1990s. So should investors expect more pain ahead? Welcome to Trading Nation. I'm Courtney Reagan. Max Wolff is with 55 Institutional and Phillip Streible is with RJO Futures. Thank you so much for joining us, gentlemen. Phil, let's start with you. I understand that a lot of the concerns here are supply-based. We have a glut of oil supply around the world. That doesn't seem to be abating by next week.
Yeah, no kidding about that. I mean, I would expect the sell-off to continue into next week here. That oil inventory total that we have is 26% above the 5-year average. So quite a bit of oil out there. I would also expect gasoline stocks to rise next week. The drawdown we'll expect is just right around 1 million barrels for crude oil. So data coming out, of course, going to be quite bearish for oil going forward. You know, our target over at RJO closer to that $40 range. So oil's holding on right now at 42. The ADX, the measuring the strength of the trend, it's still there. It's still showing that this downward momentum is intact. So $40 around the corner.
Max, what do you think? $40, is something that we could see in the future next week, the week beyond? Are we going lower, higher? What do you think?
Yeah, so look, we could see a little more short-term weakness here, but we're pretty well to the bottom of the range. We expect a little bit of a bid to come out here, so we agree we don't think the inventory problem's going away. What we do think is that some of the marginal producers are going to be out of the economics, and there's a good and growing sort of trend toward greater unrest in some oil important regions. So we don't think that we're going to go below the low 40s, 40, 41. We think we'll probably catch a bid a few weeks out from there. So in the longer term perspective, we think we're pretty near the bottom.
Phil, what do you think about the fact that it is summer driving season? I mean, does that help us at all when we're talking about gasoline?
We'll probably see that. We'll see that probably in the next week here, especially around that 4th of July holiday. That's when I think we'll start to see a draw on the gasoline, but not as the moment right now. We still have too much supply out there. Gas is 10% above the 5-year moving average.
Max, go ahead.
Yeah, so we don't think that's going to make a major material long-term difference. Might get you a little bit of a pop over a few days on the big cycles, but we also don't think it's huge. And we think that's part of the problem here. We've had a little bit slower demand for some of the gasoline, and we've had a sort of sleepy demand side. And if you put a sleepy demand side with an overactive supply side, you have a problem, which is why we think we're at the low end of the range. Where we don't agree with everyone in the market is we don't think we're going to blow out and go below that $40 handle in any meaningful or endurable way.
And if we do, I'm sure we will have both of you gentlemen back. Thank you for joining us, Max Wolff and Phil Streible. And thank you for watching Trading Nation. I'm Courtney Reagan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.